What's up, everybody? Welcome back to Earn It, Save It, Invest It. Today I'm going to go over gold and silver crashing completely. If you haven't seen the charts, this is silver going down about currently 27% and gold is about 9%. So I'm going to go over exactly what's going on, why it's crashing. As you can see over here, it is the biggest sell-off since the 80s and it drops 30% and it triggers it eases the Fed independence fear and triggers dollar. So we're just going to go over that really quick, exactly why gold is crashing, silver is crashing even more, and if you should buy or sell on this dip. So please give a like and subscribe. I really appreciate it. And let's just dive straight into it. So the market in general is not crashing really. As you can see right here, we have the NASDAQ down about 1.2%, S&P is about 0.7, Dow Jones 0.6, but as you can see here, gold is -9. Bitcoin is down 1%. So Trump's Fed pick, Warsh, sets off the worst day for gold and silver since the 1980s. They've been betting on a dovish Fed chair. Investors have been betting on a dovish Fed chair. Trump picked a hawk instead, and the gold and silver market reacted fast. So that's essentially what they're saying. If you don't know, Trump has picked someone to replace Powell as the Fed chair. So they were all hoping that, he was going to be someone that, wanted to lower interest rates and, stuff like that. But he's seen, Warsh is seen as someone who will want to keep rates on the higher end. So let's just see right here. He warned that the bond buying programs would fuel inflation. It didn't distort markets. That stance earned him a reputation of a monetary hawk. This is where I'm reading. It also makes his nomination an unexpected move from a president who has been openly pressuring the Fed, targeting its leaders and backing an investigation into current Jerome Powell that could become criminal. Trump's announcement rippled straight into the metals market. By midday, gold and silver having the worst day since Ronald Reagan was president. Gold was down 7%, and says silver was down 19%. It's worse than that right now. Worst drop since 1987. Together, it adds up to 26 combined. That's pretty insane. This kind of move almost never happens. The last time gold and silver suffered a bigger one-day combined loss was April 1987. Gold fell 5% and silver dropped 23%. The combined decline was 28%. Before that, the only worst day goes back to the 1960s, came on January 22nd, 1980, when gold plunged 13% and silver slid 15%. So it says back to the 1960s, and then it says 1980. There's got to be that must be 1960. So they're saying they put some of the blame on Warsh's reputation, right? Precious metals usually struggle when investors expect higher interest rates and a stronger dollar. They tend to do better when money looks cheap and the dollar looks weak, right? Because people want the gold because it's seen as something stronger. Like, okay, well, if the dollar is going to be weak, well, then I'm going to get some gold. For months, traders have been betting that Trump would pick a Fed chair who would push for lower rates. Warsh arrived with the opposite image. But it says you can also point the finger at the metals themselves, because gold is up about 75% over the past year. Silver is up over 180%. So that's that one. That one was from, what was that, Forbes? And this is CNBC. Silver drops 30%, gold tumbles 10% as Trump Warsh pick eases Fed independence fear, triggers dollar rally. So the dollar is going up and gold and silver are going to go down. So again, we're just talking about the next pick for the chair. Let's kind of go over this. This is getting crazy. Most of this is probably forced selling. This has been the hottest asset for day traders and for other short-term traders recently. So there has been some leverage built up in silver. With the huge decline today, the margin calls went out. So a lot of people who had margin, who were just like, I'm gonna pull out margin and put it on silver, are now getting the margin calls, which is, it makes it drop even harder because you have to sell. National Economic Council Director Kevin Hassett had been the favorite to replace Powell for some time, but Warsh became the front runner in prediction markets in recent days. Now remember, if you watch my stuff, I said I do believe the stock market, something has to give. It's got to go up or down and something, and it has this formation right now of where it's kind of pinholing. It's kind of developing this cone where it's going to really have to pick a place unless we just really stay kind of straight. I think there's going to be a breaking point. Now, there's always surprises. There's not really anything I can see that's like a really big moment, but we do have this coming. And then again, I always say Trump just has to announce something. All he has to do is tweet something and then boom. So it says right here, the Warsh pick should help stabilize the dollar some and reduce, though not eliminate, the asymmetric risk of deepened extended dollar weakness by challenging debasement trades, which is also why gold and silver are sharply lower. So essentially, by having him in, it's going to just make the dollar stronger, which makes investing gold weaker, right? But we advise against overdoing the Warsh hawkish trade across asset markets. Even see some risk with a whipsaw. We see Warsh as a pragmatist, not an ideological hawk, in the tradition of the independent conservative central banker. So just essentially, they're saying he's not gonna be as crazy. He's done he had his policies and his opinions back in 2008, but we just don't know. He could go either way on all kinds of different things. So what I do want to go over really quick is the charts, right? So we got gold down right now. Currently it says 8.8%, and silver is 27%. It was at 116, and now it's at 83. Within one day, it went that much. Now, I'm going to kind of go over some stats here. Let's see how it looks on this. That looks fine. All right. So as you can see right here, yesterday, we're looking at silver. Silver was up 212% over the last 162 days. This was yesterday. This big drop made it now, it's been up 118%. It's about the same as the other one, right? Yeah, it's about 119% in the last 163 days. So it is not, that 30% did a big, drop it did bigger than 30% to some in terms of like their position in that, if you had bought back then, because that 30% drop was almost 100%, right? So you got cut in half. So you look at, 212% in 162 days, 119% in 163 days. What does that compare to back in the day, right? What kind of numbers are we looking at? So I went back in time. Let's go here. Boom. And this is, we're looking at silver. Right now we are looking at silver. This was back in the 70s. So we're looking at a 439% in 334 days, right? Now, as you can see, we went up a lot. It had a little bit of a drop here, a little bit of a drop here, but it kind of went straight to the moon, and then it just fell after that, right? 334 days is less than a year, so it went really quick. 439% in 334 days from the late 70s, was it July 79, basically, into 80s, and then nothing after that. There's a little bit of a bounce right here, obviously, but it went from 5.5 to 14, so a couple 100% right there, but nothing like this. Then we have, in 2008, all the way to 2011, it was 910 days, and silver went up 385%. Let me see if this does actually help a little bit, yeah. 385%, 910 days. So we are currently at 119% in 163 days, right? Now, if you're looking at this chart, you don't see any red. You do see this green drop, right? You can see that candle, it drops, but there's no red, right? When I'm looking at this time frame. Over here, this 385%, 910 days, there's some reds, there's definitely some really good greens. That's what it looks like we're in right now, a red and more green. So this goes to show right here, silver, right, had a big drop right here. I mean, I don't know let's see what this drop was. From 18 to 16, no, this was it, from 34 all the way down to 14. That one was big, 57%, right? You have a really big drop right there. And then over here, can have a big drop right there, about 20%. So this thing has dropped 30%. I mean, and as you can see over here, just kind of just onslaught. It was just so bad. Down here too, it's pretty bad. So point is, silver can still run up, but you never know. Gold, it's kind of a similar thing. Right now we are at 239% out of before today. Now it's at 197% in 1,211 days, right? So we have 1,210 days from yesterday. It was at 239%, but then including today, now it's only at 197%. As you can see, did I write that on these? Oh, I did not. But you can see here, silver hit a point in 1980, and it hit that point one more time in 2011, and then in 2025. So you're talking, you're 31 years, now 45 years. So 31 and 45 years is when, like, you're not getting your money back. You know, these people who invested at this time just made $0 for all this time until now. That's pretty insane. Gold is a little bit different. Gold, before this big run, it had a 12-year span where it didn't really do anything. Then before that, it went on a 321% run from right here in 2,254 days. So it was a big run, 321%, but it also took a long time, right? It took from June 2005 all the way to October 2011, you know? So basically 6.5 years. Then you go through a period of about 28, 27 years, right? This is actually more like right here when I did it, but it doesn't reach. I just put when someone invested at the peak over here and when they finally made their money back. And right here it's still at 0% basically. And it took 28 years from 1980 all the way to 2008. It took 28 years for anybody to make their money back if you invested at this time in 1980. Now back then it went up 1,229% in 2,989 days in total, right? Or it had this other run because it did kind of tail off right here. So right here, 544% in 1,428 days. So obviously a bigger run, but it took about double the time. And right now we are currently at 1,200 days. So you can see that we could be hitting a stretch. I mean, we're at the percent wise, we haven't reached a bigger run than those, right? Here was 321% back from 2005 all the way to 2011. That's bigger than today. You know, obviously it took more time. Took another about 1,000 days. And then, you know, back over here, it was way bigger. It was way bigger of a run, right? 544%, and it took only 200 more days than today, basically, which is pretty insane. And then, you know, you kind of double the time, maybe even 2.5 times what it is that the run it's been on right now, and you're looking at 1,200%. But again, one thing you have to see is that when you reach those peaks, you're not seeing that price again for a very long time, right? I mean, you just look at it You look at this peak right here. You do not see this price again for 28 years. Same with all of this, even up to here, right? You don't see that price again. The price continues to go down. I mean, you barely even see the price even here, right? It just runs up and then it finds a point, but it just kind of stayed low. Now, granted, it does push up here, right? But you have another 12-year span where you don't see those peaks again. And again, when you're talking even here, from 2011 to 2019, that's 8 years, you don't see that price again, right? You see it for a little bit. If you don't sell in the next couple years, and you're holding on to it for another 5, 6, 7 years, hoping it goes back. So, you know, it does have room to run. It does. If you bought gold in this time frame, you're probably pretty safe, right? If you bought it between anywhere under 2,700, you're probably pretty safe for a while, right? 2,700 maybe. Silver, you could look at it as like maybe 51, 50. If you bought it for 50 or less, right? Because I mean, you look at it, it just, silver doesn't reach 40. It doesn't even reach 40. It's only reached that mark 3 times. 3 times. And both times it did, it fell tremendously. So, I mean, I would even say you'd have to buy probably under 40. Honestly, my opinion would be, and remember, this is all opinion. It's not like I'm no economist. I'm judging by what I see on the charts, what I've seen by why they fell. We have similar things going on, but, you know, why the stocks boosted up, right? Why they shot to the moon, but then why they crashed. So, looking at it, we have similar reasons on why these, you know, precious metals are going up. We have very similar reasoning from geopolitical, and, you know, we got the low dollar and the inflation and all this stuff kind of going on right now that we just had to handle in 2022 and all that. So we have a lot of similar similar points, you know, in terms of these rallies. But none of those rallies, there was 2 huge rallies just like this one, and neither one of them sustained. They both crashed eventually, and whether it's in 2 years, I don't know, but that means you could be holding on to something. If you're holding on to something right now, and it might grow a little bit in the next year, but in 5 years it's going to be worth less, it's a bad investment. As much as it may grow a little bit, if you do not sell, it's only, you know, realized gains are realized. You actually see the gains. You actually sold it and you actually have it. When you are holding on to gold and you're doing that, you're like, oh, it's going to be worth it. I got it this. It starts going up and then it goes down. You're like, oh, so I still got it. Well, eventually it could be zero. Like in terms of your gains, not the actual investment. Gold will never go to zero. Silver won't go to zero. But eventually your investment could fall through pretty heavily if you don't sell. Now, that doesn't mean I am not recommending to sell or buy gold or silver. I have not dealt enough with precious metals to really make a really stern opinion, but the only opinion I do really have is looking at the charts. This run is not sustainable in terms of in 5 years. In the next 2 years, for sure, it could still go up. You know, I mean, we had a rally 385% in 910 days. That was a lot faster. We're at 1,200. Right, what am I looking at here? Silver? Sorry, I'm looking at another one. Oh, no. That was wrong. So look, we got silver, 162 days, right? 119. This was 910 days. But still another few years. 334 days. Still almost, 200, it's 160, 170 days. Another couple 100%. So the rally could still go. 100%. The rally could go. But what happens in 5 years? I'm a long-term trader. I am not a day trader. Maybe I should have said that in the beginning. I'm not a day trader. I am a long-term investor. So when I look at these prices of gold and silver now, I personally would not buy them. I would not buy them because I do believe in 5 to 10 years they could be lower. They have had history of booming really high over geopolitical, stuff happening, inflation and dollar weakness and wars and stuff like that, right? It's just has all the same feelings. But in 5 to 10 years, things could just be smoother and be cleared out. In 5 or 10 years, we could be at a full-on war, and people just want to hold gold. It could go that way too. It could go both ways. But the last 2 times this has happened, people walked away with nothing for a very long time. Some of them for 45 years. I showed that one, right? I'm looking at silver right now. If you look at it, silver. This is a 45 from 1980 to 2025. If you bought at this peak, that's 45 years. You did not, for a second you made your money and then it all fell back down, right? Like that's insane. So me personally, I'm staying away from it. I'm not going to buy it at these levels at all. I will definitely wait for it to go through a crash in a few years, and I'm totally fine with not touching these right now. So yeah, that is just my opinion about gold and silver. Please give me a like and subscribe if you're still watching. Don't know if you are, and if you are, I appreciate it. I really do. Like I said, this is not my forte, gold and silver, but I'm just looking at the charts. I'm looking why. I did a video yesterday about the top stocks to watch, and one of them was gold, or 2 of them was gold and silver. And it was the day before it fell. Now again, Trump, he's the one who announced the Fed chair replacement, so that played a part. That was just kind of like a boom, okay, here we got an announcement about it. So that's that. But still, even at that, I still was like, these runs, I just felt like I had to talk about it. These runs look a little unsustainable to me, and so I'm going to stay away, but it's going to be fun to watch because I'm going to see how it goes this roundabout, right? I do think maybe I can buy it in 5 to 10 years, maybe 5 to 10 years. But right now I'm just playing the stock market right now, and that's where my money is. So yeah, thank you again for watching. Please give a like and subscribe. I really appreciate everyone that watches. When markets drop like this, don't be scared. Just be prepared and be aware, because then you'll be able to capitalize on it. So yeah, thanks for watching, and never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.